Awesome Oscillator! In this video, we're going to cover the top 3 money-making strategies for the Awesome Oscillator, so stay tuned. Don't forget to subscribe. The primary purpose of the Awesome Oscillator indicator is to measure market momentum. Okay, and it does this by calculating the difference between a 34 period and a 5 period simple moving average. Now on the chart, it's going to lay out a series of green bars and red bars that oscillate above and below a zero line. When the bars are above the zero line, we're indicating bullish momentum, and when the bars are below the zero line, we're indicating bearish momentum. Okay, now the green bars signal a value greater than the previous bar as long as it's bullish momentum, and the red bar signals a value lower than the previous bar, again in bullish momentum. Now if the oscillator goes below the zero line and you have bearish momentum, then that's reversed. Okay, then the green bar would actually signal a value lower than the previous bar, and the red bar would be signaling a value greater than the previous bar. Simple enough? The Awesome Oscillator has 3 traditional strategies: the zero line cross, the twin peaks, and the saucer. When we're done with those, we'll go over my final summary of this indicator. Okay, first up we have the zero line cross. This may be the most basic of the Awesome Oscillator strategies, but sometimes basic is the best way to go. And as the name implies, you simply look for a cross of the zero line. So let's get our zero line drawn on the chart so it's easy to see. In the first entry that you'll notice, the oscillator crosses below that zero line, so we've got a bearish cross. And then if you move up to the correlating spot on the chart, we'll mark our short entry, would have been somewhere in here, and that would have worked out quite nicely. Now we'll move along a little bit further, and the next cross is a bullish cross. Okay, so we would take our long entry somewhere in here, and that also would have worked out nicely. If you wanted to ride this oscillator all the way until it crosses again, you would have made a heck of a move. Okay, now we get to the next crossover is a bearish cross, and this one's not so good. All right, nothing ever works all the time, especially when you're talking about indicators. Okay, and so we cross bearish below that zero line, and we move up to the chart and we take a short entry, and we've pretty much immediately been defeated. We went short pretty much at the bottom there, so we'll mark that out as a bad trade. But right after that, we get another bullish cross, and we take that long entry and we kill it on that one. That makes up plenty for that bad short entry. So now on this particular chart, the Awesome Oscillator zero line cross strategy was dominant. Okay, this was a very, very good chart to play this indicator on. However, this is a momentum indicator, and this is a momentum day. Okay, as you can see, we're pretty much going up all day long, and then at the beginning of the day when we had that down and that good short entry, it was moving pretty good down in that section as well. So we pretty much had momentum all day, which is why the indicator worked out decently on this day. But the problem is if you have a range bound market, if it's very volatile, if it keeps going back and forth, you are going to get false signals all over the place, and you'll wreck your account. Okay, so keep that in mind. You need to be using this on the proper day, at least this strategy. Okay, if it's not a momentum type day, then you need to move on to something else. The twin peaks strategy. With the twin peaks, you're actually looking for a reversal in momentum. All right, so instead of looking for a continuation of momentum, you're looking for a reversal in momentum. Now what you want to see is a first peak of bars followed by a weaker second peak, and that's going to signal a potential reversal. If we go down here to the Awesome Oscillator, you will see our first peak here. and that is followed by a second weaker peak. And if you go up to the chart, I'll circle this area for you, you'll see that we had a double top that ended up reversing momentum. Okay, so that weaker peak could have signaled to you that that double top indeed was going to act as resistance, and you could take your short. So the question now is, well, where do you enter? Where do you take your entry? So what you want to do is you want to wait for a color change of the bars in the weaker peak. All right, so basically what you're doing is you're looking for the weaker peak to start heading on the downslope so you can tell that it's actually a peak. Simple enough. All right, so if your bars are currently above the zero line, that means you've been in bullish momentum. All right, so green bars are going to signal that that momentum is getting stronger, and red bars are going to signal that it's getting weaker. So in the weaker peak, when the green bars turn into red bars, that means you're down the downslope of the peak, and you want to take your short entry. Now, likewise, if it's been a bearish market, if the Awesome Oscillator has been below the zero line, your red bars have been signaling that that momentum's been getting stronger. So in that case, you want to see those red bars turn into green bars to show that that momentum's getting weaker and that you might be looking for a reversal to start going long. Okay, simple enough. The final of our three strategies is the saucer strategy. All right, now the saucer strategy is a pure momentum continuation play. You're looking for the continuation of the trend, not the beginning, not the end. You want the trend to continue. You want the trend to be your friend. So how do you use this to do that? Well, if you remember, when the Awesome Oscillator is above the zero line, of course that means that you should be in a bullish trend, okay? So when there's two consecutive red bars in the bullish trend followed by a green bar, that's where you take your signal. And to explain that a little more clearly, the green bars in the Awesome Oscillator are signaling that the momentum's getting stronger, right? At least in bullish momentum. So it's signaling that your trend should be getting stronger, and then the red bars are signaling that the trend might be getting weaker. And so the theory is here is basically that if you get a bunch of red bars signaling the trend's getting weaker, but it never drops below that zero line, and then all of a sudden you get a green bar, well, that was just simply your pullback and then continuation of the trend. Okay, so that's what it's trying to signal to you. So if we go down to the chart here, you can clearly see the green bars that were signaling that we were in a bullish momentum, and sure enough, the trend is bullish here. And then we follow it up with multiple red bars, but it never drops below the zero line. Then a green bar pops in to say, hey, this trend might be continuing on up. And so that is your signal to go long. And if you go up to the top of the chart here, you take that long and you get a small victory here before the trend reverses and goes the other way. Now, likewise, everything's, of course, the opposite when you're looking for bearish entries. The zero line oscillator, the oscillator is crossed below the zero line in this case, of course, to signal that you're in a bearish trend. You've got red bars in this case signal that the bearish trend is getting stronger, and the green bars signal that the bearish trend is getting weaker, okay? So in this one, if we go down and look at the chart, you have the red bars that started at the beginning of this bearish trend, followed up by some green bars, and you had a tiny little pullback, and then you get the red bars pop back in and said, hey, maybe we're continuing on down. So that's where you take your bearish entry. And sure enough, in this scenario, it would have worked out great. Now, again, of course, you need movement. You need the market to trend for you. And in a range bound or very volatile back and forth market, this is not going to work very well for you, okay? So everything in context, of course. But that is the saucer strategy in a nutshell. If you've made it this far into the video, show the love and hit that like button. Hello traders, Douglas here. We're going to go over the Awesome Oscillator on some recent action, okay? We're going to look at the ES in the time of coronavirus, all right, with the volatility that's been going on. We're going to cover the three strategies from the Awesome Oscillator that we went over earlier in the video, which, if you remember, is the zero line cross, the twin peaks, and the saucer. All right, so what we have pulled up right now is from Thursday, April 2nd, and this is on NinjaTrader, and there's something I need to show you on NinjaTrader. So when you go to your indicators, the Awesome Oscillator is down, and it's called the Wise Man Awesome Oscillator. All right, now you'll more often hear it be called the Williams, but in here it's called the Wise Man, and when you first pull this up, you're going to say, what in the world am I looking at? All right, you've got all these color-coded bars. Okay, now that's from kind of an additional system that we don't have time to cover here today, and is actually quite, there's not a lot of information about what these color-coded bars mean. There's some people on TradingView that have kind of explained it a little bit, but there's not a lot of detail on it. So if you don't want to look like you're looking at a cartoon here, come down to your options in the Wise Man Oscillator for NinjaTrader, the Awesome Oscillator indicator, of course, and go down to bar color. It's your last option. You'll see all these bar colors. Just enable that. Click the check mark off, hit apply, and now you've got a normal looking bar chart. Okay, an important step so you're not confused about what in the world you're looking at. All right, so we're going to kind of go from the market open, and my open is 8:30. I'm Central Time, and we'll see how these strategies might have played out for you. All right, and so this is kind of it's a volatile day, and we're going to just go over the basic zero line cross first. And so, as you can see, the first cross of the zero line, get that arrow turned the right way, would have been about here. And that matches up with this little doji up here. And that would have been a good trade. All right. Would have been a good trade. You could have caught that all the way up to here, and then depending on how far you follow the oscillator, you know, you might have got out anywhere in this vicinity once it starts getting hung up. But if you kind of go on past noon, you get another entry. This time it crosses below that zero line. So we'll move this over here. And it's going to be up to you if you want to take the slightest crossover, like this little tiny bar here. You're kind of risking, you know, false signals where it crosses just for a second and then goes back up, something like that. Or if you want to take a bigger bar, once you can actually see those bars going, something like that. But either way, in this situation, whatever bar you would have taken, we'll say you took this one. It would have worked out decently well. Again, okay, so depending on how far you follow the oscillator and where your targets are and where you get out, of course. Otherwise, it could have come all the way back up and taken you out. So that's pretty much the only two entries on a 5-minute chart for April 2nd on the zero line cross, okay? But we don't have just the zero line cross. We've also got the Twin Peaks strategy, and the Twin Peaks strategy, the first, it looks like there is only one Twin Peaks that happens here, and that's going to happen. Let's move this. That happens on this Twin Peak right here. You can see that one, kind of got a big arrow there. Let's get rid of some of these other arrows. So if you remember the Twin Peaks, you're going to have a higher peak, you follow by a lower peak, and then once the bar colors start changing, it shows you that you're on the downslope of that peak. And so you might have taken this anywhere. This is about the earliest you might have taken it, but you could have taken it anywhere through here, and you would have absolutely caught that change in momentum for a nice, pretty move. Okay, so on today it would have worked out okay. Now I've looked at other days where it doesn't work out. A lot of times you'll get what I call like a double Twin Peak. So you get the lower peak and then price pushes up just that one more time, okay? And then the second peak is actually still lower than the original high one, but you've got two of them there. And so what would have happened is you would have taken that first peak, got stopped out once price pushed back up, and then it would have gone in your direction, okay? So that happens quite often. But on the day like today, strategy actually would have worked out pretty well. Now we'll look at the saucer. And the saucer, if you recall, is you're looking for a continuation of momentum. And so what you want to see is something like this. You've got upward momentum, and then you get these red bars coming down. Right here, you would have had a false signal. So you get the more than 2 red bars in a row, and then the green bar signaling a continuation of momentum. Well, if you would have gone long there, would have pulled back on you, depending on where your stop is. Don't know if you would have got stopped out or not. But then if you followed it again, and then you hit this green bar here, so you get the multiple red bars, but you're still above the 0 line, you hit that green bar to signal the momentum might be continuing. Then you would have been in somewhere on this bar, I believe. Yep. So you would have been on this red bar here. That would have been okay, possibly, for a quick scalp. And then it comes down. So let's see if the saucer worked down here. And just to be clear, the saucer is my least favorite of the strategies. So you get the downward momentum, the Awesome Oscillators below the 0 line, and then you get these 2 green bars followed by the red bar. So that is where you're supposed to continue momentum. That red bar is right there. Would have been okay for a little scalp, but that would be all. I mean, good chance that you didn't get anything out of that too. So on today, the saucer strategy would have been terrible probably. The other 2 strategies would have been fine. And then we'll just take a quick, I don't know if I'm going to mark these up. We'll just take a quick look at the day before. Starting around 8:30 again. Let's see if there is, let's see where the first 0 line cross would have happened. Would have happened at about 10:50. Again, that was a pretty good move on the 0 line cross. And the market, I mean, the market has been volatile, but it has been, you know, moving in pretty good momentum. There's a lot of momentum typically behind the move. So even though it's volatile, you usually get a long move in one direction or another for some period of time before it switches back. So the Awesome Oscillator might be okay for this time period to play. So that would have been your first one. As you can see, you would have got a pretty good move out of that. Plenty of chance to get out before it does this big pullback on you. And that is about it for the day. But just to be fair, you can see right here we cross above the 0 line, and that is pretty much right at the top. If you took that one long, you would have been hurting. You would have pretty much gone one of these 2 bars and immediately been crushed. All right. So that is the danger. But if you're playing faithfully, and then you take it short right after that, if you have the stomach to do so after a big loss, boom, you catch the ride down. Okay, so maybe it's good, maybe it's not right there, right? Let's look at the Twin Peaks. I don't think there is a Twin Peaks on this day. Not until the market's pretty much closed, so we won't count that. There really is no Twin Peaks. If we go before the market open, you had this higher peak here followed by a lower peak here, and that would have got you a decent little move there. But that's pretty close. That peak is really small, so don't know about that one. But like I said, I wanted to make this quick just so you can see kind of on a real chart the way this might go for you. Of course, use whatever strategies that you already have into play about support and resistance or volume or whatever it is that you use if you're going to use the Awesome Oscillator on top of that, maybe to give you some help finding those big momentum moves. That's kind of the goal, right? All right, hope you guys enjoyed the video. Catch you next time.